Hiren, good to have you. Thanks so much for joining in. The last time that we were talking, albeit not on this forum, but when you were on the channel, we were talking about a few key sectors that could be affected if indeed there are decisions taken. And oil and gas certainly seems to have borne the brunt today. Your first take on, of course, how do you view the budget per se? And, you know, since we move sectorally, the kind of decision that has been taken to impose that cess on the oil manufacturers and the impact thereof.
Well, I think as far as the overall budget is concerned, I would say that at least the event risk from a market perspective is out of the way. There's nothing in the budget which should really worry the markets. As I had said on your channel earlier, you will probably get consolidation. You may not get a lot of creativity, and that's what this budget is. You know, it doesn't have any big bang vision or reforms, but it has certainly moved ahead in terms of giving you know, some comfort to everybody that the government is serious about fiscal consolidation. Basically, the subsidies and the fiscal deficit numbers are actually constant, and therefore as a percentage of GDP you will have you know, a significant fall, and which is what most of the market participants were looking at. Though I think that you know, I think that from whatever little that I have seen of the budget, there has been a significant revenue raising exercise through indirect taxes, and substantially broad basing the tax base, which I think is welcome, because I think anyways we had a very low tax to GDP ratio, and I think the finance minister has done the right thing by broad basing the tax revenues and closing up a lot of loopholes that are there. So I think it's a reasonably aggressive revenue raising exercise without much of a, you know, hullabaloo, and it has achieved the you know, the basic objective of you know, moving towards stricter fiscal consolidation. The only joker in the pack obviously is the fact as oil prices. I mean, we are already at $125. We have to see where that goes. And I think the numbers, from what I see, there is a fall in the oil subsidy, which means that there is a price hike which is around the corner. So they would look at an opportune time to actually go ahead and hike prices in petroleum products. To your question on cess, yes, I think that again, you know, the government has been looking at various areas in which to raise revenue. You know, thankfully they haven't increased the corporate tax rate. So they've kind of left the direct taxes broadly aside, and therefore most of the brunt of the revenue raising has happened on the indirect tax, and I think the cess on oil, you know, oil is because it is all pervasive, it's very easy for you to raise revenue you know, over there. So I think that's why you are seeing an impact on most of the you know, PSU oil companies.
Nirmal, what would be your assessment now of the auto sector? Because we have seen the excise being raised to 12% from 10%. Of course, that a bit of adjustment coming in for diesel cars where no special diesel tax has been announced. Nirmal, come to you. What is your own assessment on how you would approach the auto sector now?
Was expected, you know, a hike back to 12%. So to that extent, you know, it's not awfully negative, because that is something that was expected. Nothing specifically on diesel, I think, is positive. I think the auto sector, in terms of at least the capital market performance or the stock market performance, is going to be now more towards what happens to the monetary policy. So if you have you know, rates starting to come down, if you see inflation coming down and RBI starting to ease, I think to me that would have a much greater impact on auto stocks than the 2% excise hike. I think mostly the 2% excise hike is going to be passed on to the consumers. So really from here on, it really depends on what the RBI does as far as rates are concerned.
You know, maybe the budget is not really the place to come out with some SOPs for FDI, I mean the major SOPs like FDI for aviation. FDI and retail was probably anyways a difficult thing to come out with a budget because of the opposition. But yeah. What about a leeway given in terms of what happened to an ITC? I mean, it was left off with pretty much nothing, I mean, it was not penalized for anything per se, while the market was definitely expecting a hike in excise. That really hasn't happened. What do you make of it?
Well, yeah, I think from what I've understood of the tobacco excise, I think that the effective increase is in the range of 12 to 14%, and the market was expecting somewhere in that 10 to 12% range. So it's broadly in that range. They thought that they would change completely the method of calculating the excise. So they have added to the specific excise, they've added an ad valorem, which is at 10% of 50% of the retail price. So basically what the government is saying is that I will also share in the upside if you increase prices, and which is fair. So the thing is that I think what's important to note more from the cigarette industry point of view is that the taxation change has been very rational, and on a rational basis. It's not something which is very ad hoc, which would have created some kind of trouble for the industry. So I think it's pretty rational and within expected limits. So to that extent, I think for stocks like ITC, etc., the event risk is out of the way, and I think all these companies have already taken significant price hikes in anticipation of an excise hike. So you should now start seeing the benefit of that slowly coming in. So I think it's more neutral rather than negative or positive.
Right. From a market standpoint, Hiren, how would what came out in the budget, alter your approach towards sectors or specific stock ideas as well?
Well, frankly, I don't think that. I think the markets have now matured enough, and there may be a small tinkering here and there with some specifics that you may have, but in many senses it doesn't alter significantly the way one would invest. I particularly think that now what was wanted was that are there any unrealistic assumptions in the budget? Is the budget going to be very populist? Those kind of fears were there. I don't think any of those fears are there. We are moving. It will be a question whether finally we'll land up at 5.1% of GDP as our fiscal deficit, or closer to 5.4 or 5.5. And truly, partly the answer would also lie in how oil prices behave for the rest of the year, and how much we are able to increase petrol and diesel prices. So I think it's now, according to me, from a market standpoint, at least I don't see this budget as an event risk. I think that one thing I'm very positive about is that maybe we will not see this immediately, but I think this budget has laid the foundation for significantly broadening the tax base. So over the next 2-3 years, as our nominal GDP increases, our revenue to our tax revenue to GDP will definitely increase. I think that's significant. I think allowing QFIs in debt is also significant, because I think that will bring in a lot of money into India, because the yields are just so attractive for global investors. His interest rates there are very low. So I think this budget has many good things. It has nothing which is dramatically negative about it, and therefore I think it should be pretty neutral. I think in a couple of days the market will forget about the budget and move on in life.